When the goods and services tax was introduced, we were told it would simplify everything. One nation, one tax. But for the common person, has it truly simplified life? Or has it quietly shifted a heavy burden onto their shoulders? GST is not like an income tax, which asks more from those who earn more. Instead, it is a tax on what you buy, on what you consume every single day. Whether you are a billionaire in a bungalow or a daily wage laborer in a small hut, you pay the same rate of tax on a bar of soap. This is where the story of inequality begins, hidden in plain sight on every shopkeeper's bill. Recent data from the 2022 to 2023 Household Consumption Expenditure Survey tells a story that many have felt but could not prove with numbers. A study using this data found that the poorest 50% of India's population bears almost the same GST burden as the middle 30%. In rural India, each of these groups shoulders about 31% of the total GST collected. In urban areas, the numbers are just as stark, with the bottom half paying 29% and the middle class paying 30%. This is not a coincidence. It is the design of the tax itself. It shows that the system does not distinguish between those who can afford to pay and those who can barely afford to eat. This data paints a very different picture from the one of shared prosperity. It reveals a system where the financial load is distributed in a way that feels fundamentally unjust. While the richest 20% of the country contributes a larger share overall, that is simply because they spend much more. The real story is in the proportion of income lost to this tax. For a family earning 10,000 rupees a month, a GST payment of 700 rupees is a significant blow. For a family earning 10 lakh rupees a month, that same amount is barely noticeable. This is the regressive nature of GST in action, a silent tax that deepens the divide between the rich and the poor. The core issue is that the poor and the middle class spend a much larger percentage of their total income just to survive. Their consumption is not about luxury, it is about necessity. Every rupee is allocated for food, for rent, for the children's education, and for transport. When a significant portion of this essential spending is taxed at high rates, it directly eats into their ability to manage their households. The tax, therefore, functions as a penalty on being poor. It is a system that seems to say that the responsibility for running the country falls just as heavily on the shoulders of those who have the least. You do not need to be an economist to understand this problem. You just need to go to the market. Look at the items that fill the shopping bags of ordinary families. These are not luxury goods, but they are often taxed like them. Consider the things a child needs for school. The uniform, the shoes, the school bag, and the notebooks all attract GST, often as high as 18%. Karnataka's Labour Minister, Santosh Lad, recently pointed out how this tax hurts labourers and farmers the most, the very people who make up about 70% of our population. When education becomes more expensive because of taxes, who does it affect? It affects those who are struggling to give their children a better future. The story is the same for many other daily essentials. Take the humble bicycle, the primary mode of transport for millions of workers, students, and farmers. It is not a recreational item. It is a tool for survival and livelihood, yet it faces a 12% GST. Manufacturers in Ludhiana have been demanding that this be reduced to 5%, arguing that the high tax makes it unaffordable for the very people who need it most. This is a classic example of how a tax policy, designed in an office, can have a harsh impact on the ground. It turns a basic necessity into something that a poor family might have to think twice about buying. The garment industry tells a similar tale. There was a proposal to increase the GST on garments priced above 1,000 rupees from 12% to 18%. This may sound like a tax on expensive clothes, but in today's world, a decent piece of clothing for an adult can easily cross that threshold. Industry associations warned that such a move would not only hurt middle-class buyers, but also impact the livelihoods of nearly 5 lakh artisans who make these garments. It is a chain reaction. A tax at the checkout counter creates ripples that travel all the way back to the weaver and the tailor, making life harder for everyone involved in the process. This pattern of taxing essentials raises a fundamental question. What is the philosophy behind our GST system? Is it designed to raise revenue at any cost, even if it means placing a disproportionate burden on the most vulnerable? When items of mass consumption are placed in high tax brackets of 12 or 18%, the government is essentially taxing daily life itself. This is not just a matter of numbers on a spreadsheet. It is about the real-world impact on household budgets. It forces families to make difficult choices between buying a notebook for their child or a little more food for the table. That is the regressive reality of our GST. When we look at how other countries manage their consumption taxes, India's system begins to look like an outlier. Many nations around the world understand that a flat tax on goods can hurt the poor. To solve this, they have created smarter, more compassionate systems. In many European countries, for example, essential food items like bread, milk and vegetables are either completely exempt from tax, zero rated, or are taxed at a very low rate, often under 5%. This is a deliberate policy choice. It is a recognition that the state should not profit from a citizen's basic need for sustenance. India, by contrast, has fewer such exemptions and often taxes packaged food items. Furthermore, countries that do have a single flat-rate GST like New Zealand or Singapore use other tools to balance the scales. They understand that their GST is regressive, so they compensate for it in other ways. They often have highly progressive income tax systems, where the wealthy pay a much larger share of their income in direct taxes. They also use the revenue generated from GST to fund strong social security programs like unemployment benefits, housing support, and direct cash transfers to low-income families. These measures ensure that the burden of the consumption tax does not push people deeper into poverty. India's system lacks this crucial balancing act. The structure of India's tax revenue itself tells a worrying story. More than 65% of our country's total tax collection comes from indirect taxes like GST. This is the opposite of the norm in most developed economies, where direct taxes on income and corporate profits form the larger share. Relying so heavily on indirect taxes means our entire system is tilted against the common person. It puts the onus of funding the government on the consumption of the masses rather than on the wealth of the affluent. This over-reliance on GST makes its regressive nature even more pronounced and damaging to the fabric of our society. So, while India adopted the GST model with the aim of modernizing its tax system, it seems to have missed the most important lesson from the rest of the world: fairness. A tax system should not be a blunt instrument. It should be a carefully calibrated tool that promotes equity. The best GST systems globally are not just about efficient collection, they are about social justice. They are designed with the understanding that a government's first duty is to protect its most vulnerable citizens. India's GST in its current form seems to have forgotten this fundamental principle, leaving millions to fend for themselves against rising costs. There is now talk of a major overhaul, what is being called GST 2.0. The government seems to have acknowledged that the current system is not working for everyone. Reports suggest that the Prime Minister's office has approved a plan for significant changes, and consultations are set to begin. One of the key proposals on the table is to simplify the complex multi-slab structure. Specifically, there is talk of eliminating the 12% slab and moving many of those items into the lower 5% bracket. This could provide some much-needed relief to households, as many daily use items currently fall in that 12% category. The proposed reforms also mention reducing taxes on critical services like life and health insurance. This would be a welcome step, as insurance is not a luxury but a crucial safety net for families, especially in times of crisis. Making it more affordable could encourage more people to get coverage, protecting them from financial ruin due to medical emergencies. However, these are just proposals for now. The GST Council has been discussing rate rationalization for years, but progress has been slow. The real test will be whether these discussions translate into meaningful action that genuinely reduces the burden on the common citizen. But will these reforms be enough? Simply merging a few tax slabs might make the system simpler, but it will not automatically make it fair. A truly progressive reform would require a fundamental rethinking of what we tax and how much. It would mean creating a much larger list of essential goods and services that are completely exempt from GST. It would mean ensuring that items of mass consumption, without exception, are in the lowest possible tax bracket. It would also mean looking at the other side of the equation, increasing our reliance on direct taxes to ensure the wealthy contribute their fair share. Without these deeper structural changes, GST will remain a regressive tax. It will continue to be a system where the poor pay a disproportionately high price to fund the nation's growth. India could learn a great deal from other countries that have successfully balanced efficiency with equity. The goal of reform should not just be to streamline rates or boost revenue, but to build a tax system that is just and compassionate. The success of GST 2.0 will not be measured by how much money it collects, but by whether it eases the financial strain on India's millions of struggling households. The nation is watching and waiting.